Hey guys, what is going on? Welcome back to my Robinhood portfolio. Hope you guys had an awesome day investing today. What I thought I'd do today is continue the discussion about dividends, this time focusing on the dividend payment itself. So as you guys know, a dividend essentially is a way for the company to pay back shareholders, typically in the form of a cash payment. If I go to the bottom here, I'm using Ford here as an example. As you guys know, I love Ford. It actually just had an ex-dividend day today, so this is a perfect example and a stock to illustrate what happens on the ex-dividend date with a particular stock. So as you guys know, you need to hold the stock prior to the ex-dividend date, hold it through the ex-dividend date, at least that night, and then morning of, and then on the ex-dividend date, you can sell off the stock. So Ford, ex-dividend date today, so you would have had to have had this stock held yesterday at market close, and then today you would essentially qualify for that dividend and you could sell the stock at any point during today's trading. So the point I want to illustrate is that typically the stock price drops by the amount of the dividend. Actually, it always drops by the amount of the dividend because the exchanges do this automatically. So whether it's the NASDAQ or the New York Stock Exchange, they actually drop the price of the stock by the declared dividend of the particular company. So I'm going to use Ford here as an example. If we scroll to the bottom here, you can see some dividend payments I've received. Typically, a company will declare an amount per share that it's going to be giving as a dividend. Typically for Ford, it's 15 cents, but it actually had a special dividend attached to this latest dividend payment, so it's going to be 20 cents per share. So what you would expect is that at the opening of the ex-dividend day, which is today for Ford, that price will drop by 20 cents, and we can kind of see that illustrated here. So if I hover over the close yesterday, you can see it was $12.60, and then opening today, so that was on the 17th, opening today on the 18th, you can see it dropped roughly by actually a little bit more than 20 cents here. So if it dropped by 20 cents, it'd be 40. Actually dropped by another 5 cents, and that's probably accounted for pre-trading activity. I can't really get this down minute per minute in this particular graph here, so it probably dropped to 0.4, and then with pre-trading it dropped another 5 cents there. But the important part is you can see it drops on the ex-dividend date. So a lot of investors think that the stock will simply kind of hold through the same price, but no, it does drop because, as you can imagine, investors aren't going to pay that premium knowing that they don't qualify for that dividend. And the other important part too is that essentially a company's market cap is basically configured by the amount of shares and price per share. So as you can imagine, if a company is paying back 20 cents per share to an investor, those funds, those assets are no longer the company's assets. So that should be taken off of the company's total market cap. So you can see here Ford total market cap is $50.83 billion. So at the start of trading on the ex-dividend date, that market cap is going to fall, as I just mentioned, because those dividend payments are now part of the investors' assets. They are no longer the company's assets. So the company, or the exchanges adjust for that and are accounting for the fact that investors are not going to pay a premium for that particular company. I hope that is clear to you guys. If you guys need a little bit more information about ex-dividend dates and dates of declaration as well as payment dates, take a look at a video I just put out a couple days ago. It kind of goes through how you can qualify for a dividend based off the ex-dividend date. So yeah, just kind of wanted to talk a little bit about how a company's price is affected by a dividend, and Ford was a perfect example today because it actually had an ex-dividend day today. So yeah, let me know what you guys do around ex-dividend days. As you guys know, I've also put out a few videos about dividend capture, and a lot of this has to do with dividend capture as well. Typically, a stock price will, a couple days, a week prior to ex-dividend date, start rising to account for that. A lot of investors are trying to get in to capture that dividend, and then after the ex-dividend date, if the price also jumps up, again, they kind of sell off, and the difference between the dividend and the price drop is what they make in profit. So for example, Ford here, if the price were to drop, from 1260 to 1240, and then bumped up a little bit as it did here, maybe 1245, they go ahead and sell that off, and they would have made 15-cent difference with regards to the dividend payment and then the price of the stock, assuming they bought right at 1260 here. So yeah, a lot of different strategies that are used around the ex-dividend date, and some investors actually try to avoid the dividend. They don't want the dividend because of tax purposes. When you get a dividend, you have to pay tax on it, and a lot of investors don't want that extra income to raise their tax brackets and have to pay tax on those dividends. So they actually sell off the stock before the ex-dividend date, and then on the ex-dividend date, they buy it back. Again, knowing that it's going to drop, the price of the stock is going to drop by that dividend payment. So they're really not going to lose any money, even though they sold maybe at a higher price, and then they're buying at a lower price here. They're not going to get that dividend, and they don't want that dividend for the reasons I mentioned. So, yeah, let me know what you guys do around ex-dividend dates. If you guys try doing dividend capture, maybe you're the small percentage of investors who actually avoid dividends. I like dividends. I try to buy stocks that have high dividend yields on them, large cap blue chip companies primarily. But I have tried dividend capture in the past, and it's worked out somewhat. It just takes a lot of effort. You have to basically select a number of stocks, a lot of stocks actually, and hope that they will bounce back after the exchanges decrease their stock price by the dividend price. But yeah, just wanted to talk about dividends and how they affect the stock price. Kind of with that, I'll end the video. As always, if you enjoy my videos, feel free to like, share, and subscribe. Whole point of these videos is to learn about investing, not only for myself, but hopefully you guys are picking up some great information as well. And as I always say with my videos, if you guys have any good pointers for me, let me know. Any good stock investing strategies, any good stocks in particular, let me know as well. Anything I can improve with my portfolio, let me know. That's the whole point of this, is to learn and make some money. So kind of with that, I'll end the video, and we'll see you guys next time.